Making the shift from managing long-term savings, retirement savings, longer-oriented savings portfolios to a trading standpoint, especially during that time, that was a huge adjustment and took a lot of getting used to. Trend following and swing trading could seem at odds. If somebody argued like those are two opposite things, I would totally agree with it. The underlying principles are the same.
For me, I love from the swing low. I have a simple strategy. I hate kind of the bottom picking nature, but if a stock makes a significant low, even if it's in a downtrend for a long period of time, and then bounces a bit and then comes back to the anchored view app from that low, for me, if I'm ever trying to bottom pick, that's a strategy that I like to use a lot.
When your entry's really good and the trade starts going in your favor quickly, it's a whole lot easier to sit with it than if you get in and then take a hit and it's dipping and you're like, okay, now I gotta either watch my stop.
Okay, everyone, welcome back to the channel. Another interview today with someone that I consider a friend, Andrew Moss, who's another CMT. So I get to talk to my brethren. Actually met Andrew at the 50th anniversary of the CMT in New York. Ended up spending a couple days together. Had a great time and a lot of similarities in our trading styles and a lot of similarities as a focus of a CMT. So I was happy to meet him there. I'm happy to bring him to you guys today. And why don't we just get right into it, Andrew? Why don't you just talk a little bit about who you are, what kind of trader you are, how you got into it, all of that fun stuff.
Sure, Michael, thank you for having me. First of all, it's always good to see you again. And that was an epic trip in New York last April. It's going on again right now in Dubai. Too bad we're not there doing this in real life this week, but maybe we'll catch the next one. My name is Andrew Moss. I'm a chartered market technician since 2015. I've been working in Wall Street environment and investments as a portfolio manager and client advisor for about 20 years at Morgan Stanley, which was Smith Barney before that. So, ran other people's money for a long time and wanted to get out of those constraints a bit and more directly into the trading world. And so in 2020, I made a change and went over to T3 Trading Group, where I would call myself a discretionary trader. I prefer to kind of trend follow, swing trading approach, a combination of those, but short-term tactics and trades are not off the table and happen quite often. And so a little bit of everything in my style, but focused primarily around, a swing trading approach.
Cool. So let me pop over here. 2020 of all times. So I think that's probably a good place to start. So how fun and I guess how terrifying was that? So you basically switched from, working in a more kind of, I guess, structured environment to doing more trading and things like that during a global pandemic and one of the craziest markets that I've seen. And I've been doing this and been around this world since 2006. So how was that? I guess getting started at that time.
That was interesting timing, and it's kind of like the Wild West all over again. I was already, like everybody else on the planet, working from home primarily or exclusively for many months at that point, and so some things weren't much of a change, but the thing that was a big change was making the shift from managing long-term savings, retirement savings, very longer oriented savings portfolios to a trading standpoint, especially during that time, was that was a huge adjustment and took a lot of getting used to. And you look back, as we all do, and you think, wow, if you just mash the buy button and then walk away, how different would things have been? But you're so focused, or at least I was so focused on risk management and that kind of stuff. You're just looking at all these things, shaking your head like, wait, a copy and paste JPEG on the internet sells for $1 million, and I'm supposed to just buy things and hold them for forever. And so, we all lived through it. It was wild and crazy. I don't have to recount the details there, but the impact for me was really trying to learn and make that shift from very long term focus to much shorter time frames, much more active. You know, the concept of going home flat for the night and
Yeah.
having no risk is obviously that's nothing you ever consider when you're dealing with client money in a retail space like that, or any kind of bigger portfolios. And so that was that was a refreshing some, because if you just need to walk away, you're like, okay, I can relax and kind of reset and try again tomorrow. Or if you've had a great day, you take some off the table and get flat before you shoot yourself in the foot. Or but it was also it was also the challenge there too, because as we know, too much flexibility, too much latitude to take bigger position sizes and buy and sell whenever you want can be a downfall as well. So that was definitely a big adjustment period and a learning curve there to learn how to get used to using those abilities to my advantage rather than to my
Yeah,
detriment.
I think a cool conversation would be because a lot of people have both. I guess that's what I'm trying to get at. A lot of people have their retirement portfolio. Even myself, who's someone who's an algorithmic investor, and I think even a little longer term than you are. I still have that kind of retirement index fund area of it where
Hmm.
I feel the need to little or never pull the trigger there, and then I am more active on this side. And I guess as someone who spent, instead of one foot in each world, you spent, right, both feet in each world. I just wonder how hard that was to kind of pull those apart and separate them.
It is a challenge, and just like everything else in trading, you just have to come up with rules and parameters to follow to make sure that you are running the different systems the way you need them to run. And by the way, even though I consider myself a discretionary trader, it doesn't mean I'm not systematic. It's even the folks with the most latitude and flexibility, I think, almost always have a set of rules or guidelines that we operate within, because otherwise you're just you run around and do things that are counterproductive all the time, and waste time and capital and effort and energy. So once you establish your systems and your different time frames and the parameters that work with all of those, you just have to really focus on making sure that you can flip that mental switch to say, okay, I'm looking at SPY over here in my kid's college fund or my retirement fund or whatever, versus a trade on Bitcoin over here in a crypto portfolio, or Tesla in a trading account. And so it just comes down to planning. You structure your trade plans for the appropriate account and system and time frame, and then just try to follow the rules.
See, and you played right into my hand perfectly because that's exactly what I wanted to get at. Because you said in the beginning you were discretionary, and I always like to poke traders that say that they're discretionary because I think that word to new traders, I know that we understand it, but to new traders, I think that when they say, "Oh, I'm a discretionary trader," new traders say, "Well, I just look at the chart and I draw some lines and then I just decide whether I'm going to buy or sell like that." And then I always like to bring on experienced traders that I know what they're doing, and they say they're discretionary, and then it turns out they're actually kind of systematic. So what most professional traders say when they're discretionary is, I have a playbook, a trading plan, a rule system in which I play in, but I'm going to allow myself when to hit the button, when not to hit the button, and maybe allow something to overwrite every now and then. Did I get that right?
I think that's exactly right. And even a human system or discretionary trader, if you've been doing it any length of time at all, and I put this on Twitter several times, I try to always think like an algorithm.
Hmm.
If this happens, then I will, that kind of thing. And so the only difference really comes down to who's executing the system. Is it an automated computer program, or is it you or me operating on the rules that we set forth, and it's I just think that to have any longevity and success over a long period, you've got to have that system and those rules, whether you're algorithmic, whether you're discretionary, whatever the case is.
Awesome. So you said trend following and swing trader. Um, roughly, and again, we're not going to get into specifics of trades because we have no idea when people are going to be watching this. We're not going to get too deep in there, but just walk me a little bit through your thought process. You know, that's what I want a lot of our viewers to get out of this is I want to interview and talk to a whole wide breadth of traders. I had a gentleman on, I don't know if you've seen him around Twitter, but also named Andrew with Pristine Capital. And he talked a lot to us about fundamental. He does all this really fundamental analysis on things and then chooses when to trade or when not to trade based off of technicals. So on kind of broad strokes like that, how is it that you promote or how is it you approach the market? How do you filter down your universe of stocks? And just generally, what are you trying to look for as a trend follower?
Well, that's another on the fundamental note there. That's another often cited Wall Street clip or quote is fundamentals can tell you what you want to own,
Hmm.
and technicals can tell you when, or I like to add, more importantly, when not to own a particular stock or sector. So I think it's important to put both hands together, both pieces together. And so as a PM, and I'm not a fundamental guy. So I took some accounting classes in college and realized quickly like I don't like accounting. I
Yeah,
don't want to be
same.
this. I'm
Yeah.
not going to be a CFA. I'm not digging through the numbers. That is not my wheelhouse. So as a PM, I relied on company fundamental research as outside sources. I thought there's really smart people analyzing all these things. Let me start with a pool of fundamentally sound um, stocks to choose from, and then filter them out by technicals and see, okay, what charts look good. Where is there an opportunity with a manageable amount of risk or a sensible risk management level, and let's try to build a portfolio that way. And I do the same thing in trading, even though um, the time frame isn't generally as long. The trend following and swing trading could seem at odds, and I could, if somebody argued like those are two
Hmm.
opposite things, I would totally agree with them. But it's the underlying principles are the same, and the with all this stuff that in fractal in nature, we can break the time frames down and chop them into whatever small pieces we want. And so the commonality there is that every chart, and unless you're looking at SMCI over the last 30 days, most normal charts, they look like a sawtooth, right? They go up and they come back, and they go up and they come back, and they go up and they come back, assuming they're in an uptrend. And so whether that's a long term monthly uptrend with weekly pullbacks or weekly trends with daily pullback, whatever your time frames are, those are your position trades or swing trades or trend following trades where you're trying to get those a big chunk of that rise, and maybe taking some profit, if you can, ahead of some of those dips, or even adding to the position on some of those dips, if you can properly identify those opportunities. So it's all the same kind of tactic, just on a different time frame to me.
Well, and it's funny because, right, I think everybody, if you're watching this, you haven't read William O'Neill's How to Make Money in Stocks. He wrote that however many years ago, and a lot of it's still the same ideas that, um, you know, as got to plug Trade Ideas a little bit because it's our podcast, and
Yeah.
that's something that a lot of our people do, where we can scan for whatever you deem as a fundamentally sound company to remove all of the junk, right? So for some people, that just might be basic profitability. For some people, it may be debt to cash ratios or something like that. But I have yet to meet a trader that is really highly successful that looks at just that, right? So I think that's kind of what you're getting at is that if I just take, there's like 10,000 stocks out there. If I just take most of those and I say, okay, let's get rid of everything that is junky, that doesn't make money, right? Maybe high debt, dilutes its shareholders all the time, all of that kind of stuff. And I narrow down to names that I think are quality for whatever reason. Again, leaning on the research and the expertise of other people. Now, all of a sudden, instead of having to look at 10,000 stocks, maybe I'm down to a couple hundred, right? And then that makes my life a little bit easier. And then, right, maybe you're going to scan down a little bit further. So I think I'm going to know a lot about this because, again, I follow you on Twitter and we'll talk about your Twitter and your Substack in a bit. And I read your Substack. But when you're talking about trend as a swing trader, how is that, how do you define that? Is that with indicators? Is that just price action? Is a little bit of both, or how do you say, okay, for my time frame for the thing I'm looking at, this is in an uptrend versus a downtrend?
Probably the simplest tool is just some moving averages. For a swing trade approach, I think it makes a lot of sense to pay particular attention to the 5, 8, and 21 day moving averages. Um, that's going to give you an indication of your trend, and then you can see whether the price is extended from those levels, or has it dipped below, or what is the relationship of the moving averages to each other. Is the 5 above the 8 and is above the 21, or is the 5 dip below the 8 briefly for a potential dip buy opportunity? Those kind of things. So that's probably my primary tool to identify trend conditions for a swing trade. And again, it's it's the same thing on a different time frame. A lot of folks in a portfolio system or a longer term portfolio system are looking at 50, 100, 200 day, whatever the case is. So that's just a very commonly used. I think it's very simple. I think simple is good, and probably something I rely on pretty heavily.
Yeah, and again, just makes the most sense that right, if you just looking at the way a moving average is calculated, it's just right. If you're taking a 10 period moving average, just last 10 prices divided by 10. If you're above that, you're moving higher, at least over the last 10 days. If you're below it, you're moving lower. So we have idea generation with profitable stocks that are in an uptrend that are looking interesting. How do you narrow it down? So I see when I was, again, like follow your Twitter and your Substack, I've noticed a lot of 30-minute charts. Is that your execution time frame? Are you taking that universe and saying, okay, I want to buy Nvidia, for example. So now is it a zoom into a 30-minute time frame, and what are you looking for there?
I do like to use multiple different time frames, and I'm going to back up for just a second about when you start narrowing down. Um, and thinking about what to choose from, I think a lot of it is just weeding out the garbage, right?
Mm-hmm.
There's several systems out there that I've used in the past that, even from a fundamental standpoint, you got the S&P 500. You may not know what the best 100 stocks are. I mean, with fundamental data, you can find that too, but sometimes it makes sense to just eliminate the worst 100. Just say, okay, this is the bottom of the pile. Let's just throw those out right now. You do the same thing with the technical screen. And whether it's here's everything that's below its 50-day moving average. All right, that's out. I don't want to look at that. That's just clutter and that I'm not interested in right now. And by the way, there's different systems. You may have a system developed to look for opportunities below the 50 or 200 day, but to back to the focus of this part of the conversation about swing trading is you're going to look at things. I look at things that are at or near those shorter term moving averages, and showing some opportunity there. You want to see again, the price action relationship to those different parameters, and the 30-minute chart is a great way for me to do that. So often I'll share a chart that's got two panels on it. The big daily chart on the kind of the left side of the screen, and the smaller right-hand panel has the 30-minute chart. And the daily's got the normal moving averages. On the 30-minute side, I'll generally have just the 5-day, which is, by the way, a true 5-day moving average, not a 5-period moving average on a 30-minute chart. And a week to date.
How very Brian Shannon of you. Is that where you
I
got that
have
from?
Yeah, it's a lot of what I'm saying comes directly from the teachings of and the wisdom of Brian Shannon, from anchored VWAPs to the 5-day average on a different time frame. Yeah, that's it right there. The blue line is the 5-day moving average, and the purple line is a week to date anchored VWAP. And so
Okay.
that's straight. That's Brian Shannon 101, right?
Mm-hmm.
That's really
Oh,
good tactics.
I love it. He's a friend. He's a friend of Trade Ideas. We have a whole anchored VWAP system that we built with him. He's a friend of mine. I've got both books signed in my library, so I like that. I just knew as soon as you said a 5 day moving average on the 30-minute chart, I'm like, "Yeah, I know where that came from."
Yep. And it's so telling and useful. And again, to quote Brian, it's not these are not places to automatically do business, but I am constantly fascinated by the relevance that they show. And so looking at this Nvidia chart from yesterday, it
Hmm.
dipped to the rising 5 day moving average, and went right back to the week to date anchored VWAP. I mean, it doesn't get much simpler than that. And so that there's if you have your system ready, if you're ready to look for those opportunities, those are trades that you can take and generate some cash flow with. And that's obviously a short-term turnaround there. That's not a swing trade setup
Yep.
necessarily. Maybe if it gets over that week to day anchor VWAP and bases a little bit and gives an opportunity, that's another chance to think about it from a swing trade standpoint. But that was, those are a couple of tools on my 30-minute chart that I use, um, all the time.
See, I love that, and uh, I'm very much being very selfish when it comes to this podcast or whatever to look at because when I was talking to Andrew with Pristine, I was very interested in the fundamental side of things because that's something I just don't do. I use algorithms. I built one in Trade Ideas called TI Strength, and it does a lot of this filtering of just what's in uptrends and uses ranking system based off indicators and said, okay, based off some back tests I've done, these are the ones you should look at. The hole in my game, and we joked a little bit about the benefit of it this morning, is this multiple time frame approach. So I call myself a close to close trader because I'm only looking at the daily chart. I'm focused on what is the closing price of the candle. And then on that, in that last hour or so of the day, that's where I make my decision and I move on. But I fully understand that I could get way better risk reward if I get better at focusing on this. And I like this because I see a lot of traders that do this. They go from like the daily chart to like the 1 minute chart. And for me, that would be kind of too much noise. So the daily chart to the 30-minute chart is super interesting for me. So, what on the 30-minute chart, I know you're confirming with anchored VWAPs and you're confirming with the 5 day moving average, but what on the daily charts are you like really focused on for, okay, I'm going to hit the button right here? And also, did you choose 30-minute charts because it probably keeps you out of that craziness in the morning? Is that why you picked that particular time frame?
Well, I find 30-minute it's just a preference. That's a view of the intraday action that I like. I also use a 2-minute chart. And so when I'm really trying to pinpoint an entry or an exit, I will use a 2-minute chart. And I don't put those on Twitter very often because that's a not a broadly applicable thing for most folks that aren't focused on really short time frames and day trades and that
Hmm.
really protect entries. But I do use it a lot, and because it just helps you get a little closer, a little more pinpoint. One of the things that you hear a lot is entries don't matter. Exits determine the success or failure of your trading system, and it's not wrong. Um, but when your entry's really good and it's the trade starts going in your favor quickly, it's a whole lot easier to sit with it than if you get in and then take a hit and it's dipping and you're like, okay, now I got to either watch my stop or wait for. So I think entries do matter, and so not that it's easy or incredibly repeatable to buy bottoms or exact bottoms, but I do think it's another tool to try to hone that process and get a little more precise. And so, those are the three main time frames that I look at and use on a day to day basis. And I just think it's again, Brian Shannon, multiple technical analysis using multiple time frames. It all
Must
fits
read.
together very well.
Yeah, must read. Again, I don't want to keep you all day, but I'm having a lot of fun here. Anchored
I'm good.
VWAPs, right? So Brian uses them. I've read the book. Have you read that his book on the anchored VWAPs yet? The newer one?
Absolutely. Cover to
Uh,
cover, several.
same. Yeah. Did you see my name in there? I like to point out that I'm in like the very back in the recommended. So that's
That's
my
right.
little
Yeah.
my little claim to fame. But um,
Great.
so you said week to date anchored VWAPs. I've gone through a bunch of your charts. I see a lot of week to date, month to date kind of anchored VWAPs. I don't see a lot of say hand drawn.
Mhm.
Do you use those and maybe they just don't show up on the charts that I've seen, or what is your what is your takeaway from the anchored VWAP? If you had to just, I guess you're left on a desert island of anchored VWAPs and you had to kind of pick one, um, which one do you use and why? Because just say for me, I love from the swing low. I have a simple strategy. I hate kind of the bottom picking nature, but if a stock makes a significant low, even if it's in a downtrend for a long period of time, and then bounces a bit and then comes back to the anchored VWAP from that low, for me, if I'm ever trying to bottom pick, that's a strategy that I like to use a lot. I haven't found a lot of the week to date, month to date kind of anchored VWAPs is useful, but maybe you can change my mind on that.
I'm learning. The week to date, the or the fixed time anchor, if you want to call it that,
Mm-hmm.
is that's a newer part of my process. And a matter of fact, I really started focusing on that more when Brian gave the presentation about it at the CMT symposium last year. And so this is a relatively new part of my process. I definitely started with the hand drawn. I still use them heavily from that pivot low or a swing high or a very high volume event like an earnings or news release, that kind of thing. I think all of that works incredibly well, and that's what where originally my fascination with an anchored VWAP came from. Is just look how um, often it has a relative level and shows a place where price bounces, almost exactly, or finds resistance almost exactly. So the problem with anything, again, anything discretionary, any of the subjective parts of technical analysis is the temptation can arise to, okay, I'm just going to keep drawing a VWAP from this spot and this spot and this spot and this spot and this spot until I find one that likes.
Yeah.
And if you do that, is that really useful? I don't, probably not as relevant when you do that. So I do try to stick to repeatable, common sense areas like a pivot low, a pivot high, a news event, a high volume event of some sort, and then I have added the week to date. That's, as I said, that's on every 30-minute chart. Um, I've looked at the year to date a good bit so far early in the year, as presumably as we get further and further away from January 2nd, the first day of trading there, that those will be less relevant. And so month to date, I probably don't use that very heavily. I love I've got a couple of chart templates that I set up, and I just have the auto anchor feature set up, and usually that will do highs and lows and that kind of stuff. And so I'll see where sometimes something pops up and maybe you didn't think of, and so I like to look at lots of different areas to start from, but I do try to keep the system primarily to those those pivot highs and lows, and week to date, and of course the daily VWAP there as well.
I need to. I'll set you up with the anchored VWAP product when we're done here, and get you to review it as another aficionado, because that's the idea when we built that, is that we have scans for pulling back to major swing lows and swing highs and the anchored VWAP pinch and all that, and it draws them for you. Because for me, that's the biggest, I guess, pain of it. And like you talked about, I found myself victim a few times of, the stock's pulling back. Let me draw it from this swing low. It's like, no, it's
Yeah.
under that. What if I go a little bit further back on the chart? There's another swing low, right? If I draw it, it's the same reason why I personally don't do fundamental analysis, in the sense that I don't go and read the story of the company,
Mhm.
because
Mhm.
I actually had to develop a rule that if I'm ever on StockTwits or like a Yahoo message board reading what people are saying about the stock, that I have to sell it, because it's the only
Yeah.
reason I'm doing that is to justify a position whether it's a profitable position or an unprofitable position. I'm there just for that confirmation bias, just to say, okay, Michael, you're not wrong. You're just early.
Yeah.
So I'm going to ask everyone this, and as kind of a final question, and I know it's uncomfortable for some to relive these war stories, but I think it's important for the viewers. And I always want to go over people's worst trades. So, what was one? I have a few, but what was one that really smoked you? And more importantly, the reason I ask is because I want all of the new traders to see that doesn't matter how long you've been doing it or the letters after your name, you've definitely got hit a few times. And then
Yeah.
B, the lessons learned from it. That to me is always the interesting side because you're in this game long enough, something's going to come out of left field and hit you, or you're going to do something dumb and that's going to hit you. But the successful traders I've noticed are the ones that they get smacked and then they're like, okay, let me write down what happened and learn from it and grow. So let's share a bad story, I guess. Leave on a
Sure.
down note.
I've got two that that they pop into mind instantly, and any trader that doesn't have something that you like punches you in the face the moment that question comes up, probably just hasn't been doing it long enough. And
Mm-hmm.
so I'll give you two here. The first one, a little bit of backstory here. As a PM, when I first started running client portfolios as a discretionary PM, I thought, okay, I've got to learn how to think like a trader and do proper position sizing and all this kind of stuff. So that was a journey that really started taking me down the trading path. Even though I wasn't technically short-term trading client portfolios, it makes sense to put these principles into place, right? So you remember the Christmas Eve miracle of December 2018.
Ooh,
The market
yes.
was going down. I don't remember the catalyst, but the charts looked absolutely horrendous. Everything looked, disastrous. It was Christmas Eve. People are like, "What is going on?" And I had a few things that I was following and looking at, and I actually bought the dip. I put, and by that I mean I put a substantial amount of cash to work in client portfolios on that December 24th low. And now that sounds really good, right? The hard part was, after it bounces for a few days, I took too much of it off as kind of a cushion there because I thought, this isn't gonna, this is too much risk. This is something that we don't have too much concentration or too much exposure when the charts are this bad.
Mm-hmm.
And so not disaster per se, but that's one of those things that look back on. He's like, well, first of all, I should have bought even more, and second of all, I should have never sold because things just went up, for a long time after that, and
Yeah.
it would have made portfolios look fantastic. And so that was my that was probably the first incidence I had where I really kind of felt hit and like, wow, I should have done better. And so that's always one of my first thing comes to mind. And the second thing that comes into mind is what was it? November of 20, or was it into 21? I don't remember the time exactly, but it was the whole meme stock, GameStop, AMC, Best Buy, or excuse me, Bed Bath and Beyond, kind of stuff. And you know, I was smart. I was lucky. I was in just a good group of traders that were sharing great ideas, and I bought some of those things. And I made a nice profit pretty quick. And I was like, all right, this is crazy. See you later. And history would go on to show that that was incredibly too early. So that was one of those things that was like, okay, you need to have probably a good methodology for trailing a stop and at least holding a small piece until it feels like it's longer than it should be. And so that was an early wake up call to say, all right, you can't do all this by gut feel. You got to have some real systems in here to make sure that you keep holding things that are going in your favor.
Yeah, and so I got involved. I don't know if you're talking. I think it was like $100 or something after this second move. I got involved a little bit here, and the same thing, right? I'd like to say that I got in at 100, and I think that was like what, 300-400 at the time, pre-split.
Mhm.
But those two horror stories, none of them involved like catastrophic losses, so thumbs up for that. But B,
Yep.
there's some people still holding these things, so at least
Yeah.
it's very interesting, and that's something I actually wanted to hammer about with both of those. Not every, but most traders that I know that I respect and have a process and are good traders, they always complain about getting out too early. It's just something that I always rattle around my brain. Like one of my day trading mentors, I know the guy. He's been doing it for 25 years. He's been day trading for a living. He's great at it. Great stock picks. If anyone wants to check that out, but um, he all the time, right? Always complained about being too early. Dennis Dick, who's a Canadian
Oh yeah.
trader out here, I've chatted with him off and on. Always complaining about being too. Even Brian Shannon. So I chat with Brian Shannon all the time, and he does a sell in parts methodology, and always complaining about being out too early. So in my head, when I hear people trading or complaining about being out too early, I think they're probably onto something. I think there's and this, I know that I said the last one was the last question, but I think this might be a better one because the the problem I think most traders have, and this is just, we're talking like abstract theories now. I think that most traders don't have a problem with anything in trading when it comes to really emotion very much. The ones who have a plan, I think all of the mind games around trading comes at the exit. That's just my theory
Mm.
that like 100% of, because you buy a stock, if you're a momentum trader, it's pretty easy. You pick a whole number and something that's moving and you're buying it. If you're a trend follower, you pick, like you talked about, your moving averages. You're buying stuff that are moving away from the moving averages after they've kind of come into rest there. I think all of the mind games come with exit. And I think part of the problem is we all know that we're never going to buy the bottom, right? You talked about even that trade that you got that was near the bottom of that massive move. Like we can intellectually say, of course, right? I don't have any foresight, so I'm not going to be able to buy the bottom. But we feel like we need to buy the top or sell the top. And even though I
Yep.
don't think we intellectualize it, it's like, oh, you look at your P&L and you say, oh, well, I was up 2-3 grand, but now I'm only up 1,500. So I let all that profit come back and hit me. Or you sell it at like a take profit level, and then the thing rips without you. So I think that's a lot of the mental game. So you just talk real quickly about how do you get out of positions. There's the trailing stop, there's the profit target, and then most people I talk to, it's some hybrid of both, right? Take a bit off, trail a bit. Like, what's your
Yeah.
methodology for that?
I'd love to say I've got it all figured out and it works great every time. And that was part of that. And maybe this stemmed from the meme stock thing. That was another early realization was taking a loss at your stop is easy.
Yep.
Or getting out of something that hasn't worked for 2 weeks because the stock's just not going anywhere. Who cares? That's no big deal.
Mm-hmm.
Selling a profit or managing a winning position is the hardest thing you do because unless you sell at the exact top, you're wrong. Every time you're going to be
Yep.
wrong. If you sell and it goes up further, well, I shouldn't have sold as much or I shouldn't have sold at all. If you don't sell and it comes back down, damn it, look at all the money, the profit I left on the table there. So,
Mm-hmm.
um, that I agree 100%. That is the biggest mental and emotional challenge is trailing your winners. And so to try to systematize that, and my friend David Prince, who he was just on Dennis's show the other day with Benzinga, that was and he probably said it on the show, but he reminds us all the time. He says, I'm going to sell some and hope I'm wrong. And it's
Yeah, that makes sense.
that's just one of the best things to do is just you got to take some profit off the table. You reduce your risk a little bit and just hope the rest of it keeps going up. And so from a mechanical standpoint, I'll give a shout out to Derek Oldensmith, who I started with on the Pro Desk at T3 Live. Derek runs a great room there, and he taught early on, using a trailing stop on a combination of moving averages and pivot levels. And so, real simply, whatever time frame you're on, back to that sawtooth analogy, if stock goes up, it pulls back and kind of makes a bit of a dip. And then when it goes up to a new high and the moving average catches up to that pivot low, now you can use that pivot low as your stop, and you keep following that process up and up and up until until the run is over and you get stopped out. And you can take that a step further and use it, for partial stops. Maybe you trail a portion of a position. If let's say this is a swing trade, and you're trailing part of it on a 30-minute chart and part of it on a daily chart.
That's interesting.
Whatever it is,
Yeah.
just have a system in place to try to take some off in a repeatable method as the position moves in your favor. That's the best I've come up with. Is kind of you do that, and by the way, I still sell almost everything too early. I'm still I find myself at the end of the run like, man, I don't have any more stock to sell. I don't, or on a short, I don't have any more to cover. I wish I should have got a bigger position size. Those are the tricks that always come up in hindsight. Is you're always too big on the losers and not big enough on the ones that really work. And so trying to uh, hold more longer is certainly can be a challenge. And that's from your standpoint on. I'd like to hear your take on that as kind of an algorithmic or more of a systematic guy. Um, I think, and I'm not a back test guy. I'm not a quant, and I don't know if you've done work in this field or not, but I feel like I've read studies out there that show, stops hurt performance. People make that argument all the time. You got to manage risk, but actually stops hurt performance, and so on and so forth. And I wonder, is there a kind of a Goldilocks scenario for a swing trade portfolio that's just on, like, this is the time frame, this is the moving average, this is the system that produces statistically the most number of gains and holding the winners for the longest and that kind of stuff. And it's a fun question to entertain. I'm interested in your feedback, but at the same time, it's everything. Every stock and trade is so different. I don't know how there could ever be anything that worked across the board like that. So what do you think?
There can't be, and I think I think you hit the nail on the head with the you're always going to be wrong. I think it's not a question so much of optimization. I have done a lot of back testing with all of my systems with this. I don't think it's so much a method of optimization. It's a method of what you feel comfortable with, and that is, you would make sense to you from the world of retirement accounts and things like that. The first thing you do is you sit down with a client. You say, okay, what's your comfort with risk? When do you need the money? All that. And I think taking profits is kind of the same way. Where the back tests that I've run that have some sort of either portfolio rotation, which is a couple models I run, it takes this algorithm that says, hold the top 10 once a month. Just if something's bumped out of the top 10, sell it and add something else in. Or profit targets, they give the smoothest equity curves overall, but they lack that every now and then, right, hitting it out of the park. And it's the other way around. If you use, say, a ATR trailing stop or a moving average or something like that, the equity curves are way choppier, but you can just hit a couple every year. And it was interesting because I know you were at the CMT with me when Jerry Parker was on, who's a
Mm-hmm.
famous turtle trader, a trend follower. And he talked about his equity curve, how it is, essentially nothing for a long period of time. And then all of a sudden he catches one or two and just blows it out of the water. And that's because he uses some sort of ATR trailing stop system. So for me, I think it's more about the goal of the account. So if you're going for income, then a profit target might make more sense. If your goal is just pure capital growth, then a trailing stop may make sense. But I think from a psychological point of view, regardless of what the math is, and I think this is why so many traders, like you were talking about, Brian Shannon, myself, we always end up coming back to a sell a half or a third or something, and then it's essentially just a hybrid approach, right? It is okay. I'm up a good enough amount on this trade. Let me take some off the table. My buddy Sean McLaughlin with All Star does this with options. He
Hmm.
buys, if he buys calls options, he's immediately putting out a profit target for half at a double of that call
Yeah.
option. And he's like, I know if I sit back and I run the numbers, that's probably wrong, right? I should use some trend system. He's like, but for me personally, I can now hold through earnings because my risk is completely off the table. I can hold through drawdowns. I can hold all of these periods of time because now all I need to do is say, okay, whatever I can sell this call option for is my profit above my risk, um, and and just let it go. So I really think at the end of the day, it's interesting to chat about, but I think we're kind of chasing a dragon, right? Where it's like you're never going to get it. It's like, what are you okay with? What can you be okay with being kind of less wrong about?
You have to establish the avenue of least regret.
Yeah.
And we're all different. We all have, and so that ultimately you're trying to come up with the system that minimizes your regret once the trade is over. And some folks, it's hard to argue with. Take half off when you're at a double and your risk is covered. If you get stopped out, it's a break even. Who cares?
Hmm.
And some people are fine sitting at something that's going deep in there against them, knowing that it's going to, or at least having a good thesis that it's going to come back and be profitable in the end. So we're just, every stock is different. Every trader is different. It's hard to quantify, I suppose. So we'll just keep trying to figure it out along the way.
And I think that's a great kind of message. Is that right? Just find stuff that work for you. So I want to point people before we take off. Oh, not there. There. So it's another edit. So I want to point people before we take off to a couple places that you can find Andrew, and then I want Andrew to kind of plug away as well, right? Substack, Trading Adventures, again, nightly, I'm sure, right? Comes out every night. I'm pretty sure I read it every night. Um, and just
Twice a week.
twice a week.
Yeah, Mondays and Thursdays, I publish an article on my Substack.
And they're great, right? I'm just scrolling through the last one here. Again, I read
Yeah.
through these all the time. There's a lot of charts if you're a chart guy. Again, I love it because it's what I like to use these Substacks for is I like to do my own analysis first before I open up
Hmm.
anyone else's, and I have my own plan and my own system in place, and then I open up other people's analysis and I go, okay, is there something that they're pointing out that I didn't see? Is there something that I'm pointing out that, if my favorite is if I have an idea and I'm like, okay, I'm really interested in this, or I really think that the market could stall here, or for whatever reason, and then I open up your Substack and I open up a couple others that I look at, and they're all kind of agreeing with the same thing, then I really feel that I'm onto something. But yeah, I always love doing my analysis first. So that's Trading Adventures, and also just Andrew, and it's the double underscore. And I know that's not picking up
Yeah.
on our recording software the best, but yeah, so make sure you do the double underscore. How much do you get bots trying to scam people with like one underscore
Yeah.
or three or four, or it just seems like easy to go after?
It's yeah. Maybe it's gotten better recently, but it is a problem, and it's not an optimal choice of username, but that was what was available at the time. And if you also, I've tested this a little bit. If you type Andrew Moss CMT into the search bar on X or Google or anywhere, that'll usually get you where I'm at.
Perfect. So is there anything else people want to check out? Any parting words for our audience?
That, yeah, I'll add a couple of quick notes here. But yeah, again, the Substack is Monday and Thursday evenings after the close, and that's
Yep.
just a quick market overview of the major indices, Bitcoin, the dollar, that kind of stuff. Every now and again, some individual charts. I'm active on X or Twitter, if you will, throughout the day with a lot of stuff. And every Saturday morning, back to multiple time frames, I run through weekly charts, and so I try to step back and take a big picture view of kind of the world landscape by looking at the weekly charts. And of course, today being the last day of the month, I'll post some monthly charts either later this evening or over the weekend as well. So, trying to put all those different time frames together. So you can find me in any of those places. If you're interested in trading, T3 Live has a great setup. virtual trading floors. I started, my first exposure with, as the case for many, Scott Redler, the Red Dog back in the day. He's got a great room. Derek Olden Smith runs the Pro Desk, where most proprietary traders with T3 Trading Group are throughout the day, and then I'm active in the inner circle with David Prince and Rick March and Kira Turner on a day-to-day basis. That's a really fantastic group of just a lot of folks. So just search T3 Live on my Twitter feed, on the web, wherever you want to, and look us up there if you're inclined to do so.
Yeah, and I want to hit that home as well. Trade does have um, a relationship we've talked about with them. I know a lot of the traders there use Trade Ideas. I've spoken to Scott a few times. We've stumbled across each other at different events and things like that. And yeah, it's a great. I really love the trading community aspect of stuff, because it is very lonely to sit in your room and just
You
stare
got
at
to find your
screens.
people, man. You
Yeah.
got to find your group and your tribe to cohort with over the days, right? Because it can be very solitary if you let it.
Well, and I don't know about you, but every time I go talk to my wife about trading, she's not interested. So finding a good group that actually cares, I think helps out a lot. So
Yes,
um,
it does.
that was awesome. I went. I know I stole a whole bunch of your time, but I was just having too much fun. This
No,
is
it flew by, man. That was a great chat. It's really nice to talk about everything kind of on a high level and not like the Substack. I'm sure you probably deal with this too. It's like, all right, I'm going to write another article about everything that happened in the stock market today, which was exactly the same thing that happened the last time and the time before that. And you're like, so,
yeah.
to kind of separate all that and talk, just a real conversation about, those bigger concepts. That was a lot of fun. I appreciate it.
Yeah, I think our viewers will love it, right? We provide the picks and the shovels, so you can find whatever it is you're looking for. But where we want to help, because as a software as a service, we want to keep our clients around and profitable as long as we can. The goal of this podcast and what I want to do is try to get people different ideas and hearing from different traders, and trying to get inside the mind of people that do it. Some they may agree with, some they may not, but I think it's very important to kind of find your style. So if you liked a lot about what Andrew Moss here was saying, again, we told you all the places to find him. Thanks for joining me. I hope to have you back very soon. And yeah, I'll talk to you soon.
Thanks, Mike. I look forward to it.